I'm hoping to share with you a little bit about what's going on in the minds of startups, in the minds of early stage investors. And at the end of this, I'm going to try and turn you all into early stage investors. 500 Startups is the most active early stage investor in the world. We've been around for about 6.5 years. We've made 2,000 early stage investments in nearly 50 countries. We take, as opposed to many venture capitalists, what we think of as a highly diversified portfolio theory. The results so far have been pretty good. We've had 4 unicorns in our portfolio, and you'll note that 3 of them are fintech. And 40 what we call centaurs, which are 100 million to $1 billion in value. Still early days as a venture capitalist, but doing fairly well. We're also the most active early stage fintech investor in the world, with over 200 companies in over 26, I think we're 27 countries now. We're investing in another 30 to 40 companies a year. We invest across the financial services value chain in both new financial services brands and enabling technologies to help banks and insurers modernize. And we help existing financial institutions try and get a view into what's going on at the earliest stages of startups. So I'm going to share with you now a little bit about what innovators see, what entrepreneurs see with what's going on in the world and what motivates them to start companies in this space. It's huge, and it's virtually untouched by digital technology. That's the first thing. The second thing, untouched by digital technology, less than 1% of all loans are originated online today. So think about how much more could be done. That there are 3 billion new potential customers coming into the market over the next 3, 4, 5 years. And today, existing financial services cannot service them. And it's because close to 30%, right, of OpEx inside financial institutions are going to operating. There's a $500 billion a year spend on technology just to support existing financial services. And that's a lot more than it really should be. Oh, and then there's this issue, that 71% of millennials would rather go to the dentist to the bank. And then it's not only about millennials as customers. The boards that we talk to from financial institutions realize that these are the people who can help modernize, but who don't want to go work for a financial institution. And then the big one is that these are the companies that are controlling customer expectations. It's no longer financial institutions. And if you think that you're going to escape it if you're a B2B, a corporate banker, a capital markets person, remember that the same people inside those institutions, right, that you have to do business with day to day, their expectations of what an experience should be like are still set by these people. And then, well, there's the specter of the same companies that are controlling customer expectations are moving into financial services. And as our last speaker pointed out, there's Alibaba, which is the largest e-commerce site in the world, that has spun up and gotten a banking license and become the largest fintech in the world by a wide margin. So into that context, we have what venture capitalists and entrepreneurs are doing about it. Today, there's about 15,000 startups globally that are working somewhere in financial services, whether to disrupt or to enable. And they've received over $50 billion in just 5 years. That's an extraordinary amount of money. And just in 5 or 6 years, you've got today 23 unicorns, not counting Ant Financial. These companies didn't exist 5 years ago. And look at their market cap. It's astonishing. So when you begin to dig down, just in the last quarter, we've seen 226 new startups get investment on the order of $2.7 billion. And this is ahead of where we were in the same quarter in 2016. So the pace of investment is continuing to increase. We just saw that in the last quarter, Europe took a spike up in its investment in fintech startups. Now, you can argue why that is. My own feeling is that with, what do we have, 51 insurance regulators in the US, we have God knows how many banking, finance, other regulators in the US, it sets a context that makes it very difficult for people like me to decide to make additional investments here as opposed to somewhere else. Now, corporations, banks, and insurance firms are also playing an increasing role. 30% of VC investments now are coming from banks and insurers. So they're beginning to figure it out. And you've got to wonder if your organization is not engaging with startups in this way. Are you finding the new technologies? Are you beginning to transform your culture? Now, this is interesting. As of the end of last year, blockchain and crypto took a giant dive in their investments, and it's begun to pick back up again. And I think that's because POCs, proof of concepts with blockchain across financial services, have been going on. Nothing's been deployed for real in the last couple of years, but it looks like it's just beginning. So now my colleagues in venture capital are beginning to get interested again. Payments, and we'll see another slide in a moment about payments, just took an uptick as well, but you'll notice it's a very small dollar volume. And this is something that happens in early stage innovation from time to time. Years ago, you could argue that fintech got started with PayPal, and you had the explosion of payments companies. And again, we'll see more in a minute. But then it took a little while for the economy to digest, well, what does that mean? And then all of a sudden, you begin to see new opportunities like compliance in payments, or what more can we learn about our customers' desires out of payments. So we've seen a lot of interesting new next generation things that analyze payments data and deliver some value on top of that. Lending, right, way down. Everyone's uncertain about the credit rate environment, about what's going to happen in regulation. We had some problems with some of the early online lenders, so we've seen a drop in lending. InsurTech kind of looks like it's down. I think it's just the digestion of deals in the last couple of years, because when you look at it with a longer trend, it's spiking. So insurance followed banking, but it's on a steeper ramp than banking is. So I often get the question as an early stage investor, how do you pick winners? And mercifully, as doing large portfolio theory, I don't have to pick too many winners. I have to coach them, but I don't have to pick them. But I want to talk about what we do look for. And can't tell what's in the background there. It's Rorschach test. Early stage investing is about pattern matching. And these are some of the patterns that we see over and over again in companies that are successful. Are they going after a big problem or trend? Does the entrepreneur have some unique insight about that problem or trend? Do they get up every morning bound and determined to change the world into the thing that they see in their mind's eye, that they are irrationally persistent about it? Are they focused on their metrics? In early stage investing, there's actually a series of things that you knock off as risks. And if you're focused on the metrics that represent those risks, you're more likely to be successful. And then as a very early stage investor, one of the most important things for me is there follow-on capital available? Will the next investor put money in? And so when you think about financial services, right, across the board, what you see is that there's a hell of a lot of payments companies and a hell of a lot of lending companies, and less in many of the other sectors. So now when you take a look at why did the payments investment do what it did, why is the lending investment doing what it did, it's because the market is already pretty crowded. And when I look at a company in one of these spaces, if they're not on the right side of the wheel, they're probably not going to get next round of investing. Okay. So now we're going to play a little game, startup hot or not, or my colleagues in venture capital sometimes call this buzzword bingo. And I'm going to ask you to help. I'm going to put up the name of some market segment or sector, and I'm going to ask you if you think it's hot, right? If you, as an early stage investor, with what you just learned, you'd invest, I want your hand to shoot up and take a look around, and then I'll tell you what's actually going on. Does that sound like a reasonable game to play? Okay. Alternative data sources. Where do you get interesting proprietary data, right, to support New underwriting models, new KYC, this kind of thing. What do you think? Hands up. Good. Hot. The king buzzword of them all. Okay. Not bad. Looks like about 70%. It's really mixed. We see a lot of entrepreneurs walk through the door that say, I've got the greatest algorithm in the world, and it's going to change the world, and forgive me, the Singularity is coming, and we're going to be working into that. And the answer is, unless you have the last thing, alternative data sources, basically anyone can build another algorithm. So we really, at the earliest stage, we don't really like entrepreneurs that are just selling AI. On the other hand, if you tell me we're going to use AI to expedite your KYC, all day, every day. Okay, next one. Technology to help banks improve how they sell. What do you think? Okay, a bunch of you are missing it. Super hot. Okay, this other one. Blockchain. What do you think? Okay, you learned from AI, right? General blockchain platforms, not so much. Applied blockchain, yeah, we're looking at it very hard, and we see that our colleagues, our follow-on investors, are really interested in putting more money to work. Capital markets technology. A lot of opportunity there. A lot of opportunity there. So if you think about it, what this means is inside of large corporations, you've got Salesforce.com for the salespeople. You've got Marketo and HubSpot and Marketa and HubSpot and others for the marketing people. Who helps the CFO? Who helps the AR people, the AP people? What do you think? Wide open space. Wide open space. Cryptocurrencies. Anyone? Good, you're right. No one's funding cryptocurrencies except ICOs. Cybersecurity? Good. Financial inclusion. It's another one of those mixed things. We're going to help, get those 3 billion people transacting financial services. Not so interesting. We're the last mile to deliver products and services to the hundreds of thousands of little tiny shops, right, across Africa. Yup. Again. Does that make sense to everyone? Okay, game's almost over. Are you enjoying it? It's good? You learn anything? Okay. InsurTech? Yep. Hot. Millennials. Did I actually hear a groan over here? That's right. Nope. Cold as ice. They don't have any money. Online lending? Good? Nothing? Payments? Uh-huh. RegTech? Good? Robo-advisors? They don't work. No, more accurately, you take a look at things like Wealthfront and Betterment and all these others, and they've raised $300 million or so, and maybe have about $13 billion under management. So it's taking much longer than anyone ever thought to try and acquire those customers. Now, this is one of those market sectors where it's sort of switching into B2B technology, where you're selling this kind of technology to banks, and it may come back the other way as you see transfer of wealth moving into those millennials. That's what I got for you. Do you feel like an accomplished investor now? Okay. It turns out I have 5 minutes, so if you have any particular questions, I'm allowed to take it. I don't know, what you think. Questions? Just yell something out. I'll repeat it for you. Please.
So you were speaking about areas. Are you also looking at special geographies?
Are we looking at special geographies? Well, that's the question? So our own thesis is that opportunities and talent are widely distributed globally, and capital is less so. So yeah, we try and go wherever we can. I probably, in the next year, will make 4 or 5 investments in Africa, another set in Latin America. Tend to find that deals are overpriced in Europe right now. But we think there's opportunity everywhere. Yeah, please.
Do you think financial inclusion is about serving the unbanked or underbanked, or is it about rebasing the cost of service for everybody?
We think it is the latter, right? One of the ways that we talk about our fund is we're financial services for the rest of us. So if digital technologies have not really penetrated financial services, it's going to bring down the cost base across the board. After that, it's anyone's guess who will do the right job in terms of acquisition and servicing. Yeah, please.
Thanks, Mike. Great information. You talked about a hot sector being technology to help banks and how they sell. What are some examples of that kind of technology?
Sure. So I'll give you one example from our portfolio. It's a company called Alpha Rank. Founder is the child of 2 virologists, right? And what he figured out was essentially how do you use a bank's own payment data to identify, if you will, patient zero, right? So looking at payment data, I can see that this one particular customer, when she buys a new service, suddenly, whether it's through geography or another thing, I'm not going to pretend to articulate their algorithm, they can identify when that customer creates pass-along to other customers. So it allows them to create essentially referral programs that rather than spending $200 a customer to acquire, a credit card customer, they can give her and the customer each $50 on a referral program and drop the overall cost. So that's one example. Another one we have is a company called HomeBot. It's in the home space. And what their 2 ideas was the first one is that for Americans, 83% of assets are held right in the home at retirement, right? But there's no one to help you maximize the wealth in your home. The second one is that mortgage lenders and real estate agents and who have you spend $12 billion a year essentially reacquiring their own customers, right? So these guys built a PFM for your home that uses interest rate data and comparables data, and they sell it software as a service to wealth managers, to lenders, to real estate agents to help them to retain their own customers. Is that a couple of reasonable examples to you? Okay. Time for 2 more. Yeah.
Do you think some of the online lenders, which were hot but now they're cold, could partner with banks and get hot again or make them both hot?
It's already happening, and it actually has been happening from the beginning. So when you look, for example, at Lending Club, which was one of our first peer-to-peer lenders in the U.S., they were really smart. They opened up all the loan data via an API from day one, and institutions were the ones that were basically trading in the paper behind the scenes. There's all kinds of collaborations going on with On Deck Capital and Cabbage and a bunch of the others, where whether it's a lead exchange situation, it's the bank can't write a loan, sends them to someone else, these kinds of things. So it is happening, but I feel like it's stalled a bit because, again, you've never had a downturn during online lending, so you really don't know what the quality of those portfolios are. Thanks, Mike. Yep, one more.
Thanks, Mike. Could you comment on opportunities you might see in CFO enablement, I think you labeled it, and also business-to-business lending opportunities?
Sure. So another one of our investments, it's called YayPay, right? And they basically analyze the invoice flows for B2B businesses. And what they do is they put together a cash prediction mechanism so that the CFO, rather than using spreadsheets, can actually get a real-time, prediction of what cash is based on payment behaviors of all their customers. They've then used artificial intelligence to automate collections. And in general, they're seeing collections double-digit percentage points faster, right? So now, in their words, every time, the sales gong rings, the salesperson's the hero, but the collections people, their hard work just began. And so they say, well, they turn the AP people into revenue heroes, right? There are, we talked, I think, probably earlier about trade finance. Lots of opportunity in tying into the ERP systems of corporate customers and delivering working capital solutions on the fly. How's that? Okay. That's all the time I got. Thank you very much. I hope you've learned something. And I'll be here the next 2 days.